Morning, Shane. Thanks very much for speaking with Blue Notes on this, the morning of the ANZ interim result. The headline numbers look good. Statutory and cash earnings, return on equity, capital generation, credit quality, they all look pretty good. But there's a lot of moving parts in this particular result. Can you talk us through what pleased you and perhaps areas where you want to focus a bit more?
Sure. I think, first of all, moving parts are inevitable when you're reshaping a business, and that's what we've been doing for the last couple of years. You know, it's all about focus. We think that the only way for us to really win in the eyes of our customers is to do a few things and do them really, really well and be operationally excellent. And in order to get there, we need to sell some things, shrink some things, stop doing some things, and that's where the moving parts come in. So, you know, it's an inevitable outcome of that. It's still a good thing. It's our job to be able to explain that to investors and to the market. So what are the highlights? The highlights are that our core business continues to do really quite well. So more customers are choosing ANZ. We're continuing to pick up market share where we want to. So for example, in Australia, that's owner-occupiers, people who want to buy and own their own home. You know, we like that sector for lots of reasons, and that's where we've been growing. So that's a good highlight. The other thing that I think was just the operational excellence that you saw through here. You know, the way that we've been disposing of some of the businesses has shown that we've got a team who are really on top of their game and know how to get those things done. So a couple of really good highlights in there, and I think it's really about being well managed through difficult times.
And you speak about the reshaping being ongoing, and simplification obviously is ongoing. A lot of that, as you've just mentioned, is about execution. Are there numbers that you can point to, aspects of the result today that you can point to and say, well, look, this shows that we're doing a good job?
Yeah, so there's probably a couple of things. There's one way of looking kind of inputs and outputs, if you will. So the inputs are, if I look at the Asia retail business, which, you know, we announced quite a while ago that we were going to sell, and it was 6 separate countries, so essentially 6 different businesses. You know, we've had to transition, you know, a couple of million customers, dozens of branches, thousands of people. You know, we sent out 5 million letters to customers advising them of the changes and keeping them up to date. And we're able to do that ahead of schedule and under budget, and actually ended up with a better financial result than we had indicated at the time. So I think that's about operational excellence. So that's very good. The other thing is really more of an outcome. Part of our the reason that we're simplifying the bank and to be more focused was essentially to de-risk it. And, you know, there's different ways of thinking about risk. We certainly want to de-risk it from a reputational point of view and an operational point of view, but also just from good old-fashioned credit risk point of view. And you saw in this result our loss rate really come down quite significantly. Now, undoubtedly, some of that is because the environment we're operating in is pretty benign. But over and above that, what you've seen is really a restructuring benefit. You know, by not being in certain businesses, emerging corporate in Asia, Asia retail, the standard dealer finance business, etc., that has de-risked our book, and we got the results of that in this half really in quite a material way.
You've noted, though, headwinds. Obviously, there's a Royal Commission going on at the moment. There's a lot of cost pressure. Revenue growth is reasonably flat. How do you anticipate having to manage those sort of operational headwinds as we move into the current year?
Yeah, so actually for the last couple of years we've talked about headwinds. I think, you know, our sector has had a golden period for 20 plus years, and we don't think that's going to continue. It is going to be harder. And so in a tough world with headwinds, all of those things that you mentioned, only the fit will really survive and prosper, and that's what we've been about, getting fit for that. Again, I hate to harp on about it, but it's about just doing a few things and doing them extremely well, being really tight in terms of what we can do. So we think revenue is going to be harder to come by for our sector.
And is there actually any tailwinds?
You know, surprisingly there are, and probably, so the economy is still doing pretty well. I mean, the tailwinds come that there's still strong business formation in Australia and New Zealand, so more and more Australians and New Zealanders are setting up small businesses, and you know, small businesses need a bank, and we're a great place to come to. Probably the one that's most visible is probably trade. You know, we've seen, despite a lot of the rhetoric around trade wars, etc., trade volumes are actually on the rise, particularly in our part of the world, in our back door here, right in the Asia area. And ANZ is, at its heart, we're a really, really great trade bank. And so we've seen a little bit of a tailwind from there. And of course, perversely, because of global growth and a little bit of optimism, interest rates are rising in other parts of the world. And as a general rule, that tends to be of a mild positive for somebody like ANZ. So yes, there is a few tailwinds, not too many, It's not going to be easy, but it's not all doom and gloom.
And just you've spoken quite a bit about the Royal Commission, and obviously it's ongoing. But a couple of points you've made, you won't be trying to preempt the Commission findings, but you won't be waiting until they report before you start to do things. And then I suppose the second part is that the area that's had the most focus to date anyway is financial advice. Is that still something banks should do?
I think so. So I'll answer the first part of your question first. Look, obviously we have to participate in the Royal Commission, and we're doing so in an open and transparent way, and there'll be a report and recommendations. But that doesn't mean that we should just sit on our hands and wait. You know, when we see things that there's been legitimate questions raised, either about us, about our actions, or that we see in others, we sit down and say, well, what should we modify? What should we change? And so we're doing that as we speak. And I imagine there'll be lots of changes that ourselves and other participants will make over the time. In terms of financial planning, absolutely. Look, there's a role to play for that. People need advice. I do. I mean, we live in a complex world. Superannuation, taxes, investment alternatives, life insurance. You know, these are lots of things out there for people to make choices on, and you need a good guide to help you make some of those decisions. So there is absolutely a role for planners. Do we have to rethink about the educational standards, about their incentives, about transparency? Absolutely we do. And I imagine, that, again, my guess is that there'll be changes along some of those areas before the Royal Commission, because actually the industry has already been trying to make changes in those areas already, and some of those are announced. Perhaps too slow and not sufficient, but we'll get there.
Well, thanks very much for speaking with us today.
Thank you.